as much as I know how it feels, I've been there more times than I like. But the one thing that can help prevent What's going on, guys? We have another Sunday video, this time for May 1st and the week ahead. It's a beautiful day at the beach. It is raining. It's not supposed to stop. It's flooding. I mean, it's just not nice at all. But last week's been the craziest, I would say, week, maybe back to HKD, right? I know we've had, CXAI and AI and runners like that, but as far as just these outlier, uncontrollable, like account breaking style of moves, I don't think we've seen anything since HKD, or AXTG or ATXG, whatever one that one was. But, there wasn't as many that went crazy right after as we had on top this week. So, it's difficult to talk about it right after. There's some people that as soon as I start talking will shut this video off and just be like, he's just saying I told you so, or trying to say he called it. None of that is what my goal is on this video tonight. My goal is to go back through a little bit. I'm going to do a bigger video, I think, but go back through the moments, the steps, the signs, the comments that, kind of showed its hand a little bit. Now, do I warn often on different names that will never even make a move like this? Absolutely, 100%. Right? Sometimes I overwarn just because if it shows the signs that it's a little bit, there's a little potential that an outlier move could happen. For me, and I'm not old yet, I don't think. I'm 37, but for me, like those days are done. I'm married, I've got kids, I've got real estate. Like I don't want to put myself in a position where I end my career. And we've talked about max stops. I've talked about usually on Sunday video, anytime that I have some major loss, I talk about it and I, wear my next shirt, next reset, refocus. And talk about how I'm gonna be focused moving forward. And over the last 2 years, the best change that I've made is put a max stop on my account. And you're always going to be upset. And I've talked to people that put the max stop on their account, and they're like, "Man, it got me out right at the top, and then it unwound." Right? That's going to happen. And you're going to be frustrated that you get out top tick and it's your max stop and you would have made money. However, you have to pay attention to days like last week where it would have saved your entire career. That's what it's there for. Yes, I hit my max stop many times, which I've lowered over the years. I used to back in 2020, that six figures was like a normal, sort of, back and forth rounding error, right? And for some, maybe not everybody. And then, you could get away with a lot. There was a lot of liquidity. You could make a lot of mistakes, make a lot of money, lose a lot of money. But either way, you had the chance to really make it back because the liquidity was just so big. So you could have wider stops because you needed them. Now, flash forward as liquidity kind of dries out in certain situations and stuff, maybe that much of a buffer is too much. So then I had brought it down and brought it down. And we always talk about this, literally every single broadcast, every single time that these market sort of cycles start to really heat up. And I think that this was a prime example. And, I know people that got hurt bad. And I mean, even if you didn't know, it's obvious, the stock went crazy. Like that's not longs going, nuts and making a ton of money. That's shorts literally, getting their accounts blown out. And, so the good news, I got a lot of PMs about either so happy their max stop hit or so happy that they just avoided it. And so what I want to do is I really want to focus on a couple things. Last week we talked about the dip and the rip candle. And that came in to play so much this week. Whether it's top, MEGL, HUDI, all these different names. That is the candle where you need to say, hey, am I oversized? Am I assuming that X is going to happen? However, I'm oversized for it. I'm oversized for that current situation, right? I'm predicting that it's going to crack, but it didn't. It did a dip and rip. Am I oversized? And you do have a small window to make the right decision, typically. It's not always just a dip and a circuit halt or anything like that. But there's usually that 3, 4, 5 minutes, and you're like, I'm going to stick around. I was just up a little bit more. I'm going to wait and see what it does. Guess what? Boom. Too late. And it starts to swipe back up. So that was this week. And we talked about that on HUDI late day. I think I'm going to save that one for a second video. I'm going to really, really try to get one out maybe tomorrow, the next day, and do, a little bit of video screen record and things like that just to go over it. But I think that the biggest thing and the biggest what I wanted to talk about is or was top predictable. And most people, if I were to say yes, they're gonna think, okay, Nate's trying to say like he called it and it's going to 260. No, it's not the case at all. What was predictable? What was predictable was that the trap that was formed was the same exact trap and situation that we saw with ILAG, right? Top, we know and have known for weeks that it's been wash volume back and forth, back and forth, back and forth. Literally 80K random volume and then, a couple little prints and then literally 80K, 100K volume bar, couple little prints, just not natural volume, just kind of building that trend, building that average volume base up so that, whether it's the ease of borrows come up, I don't know how much goes into, the decisions on pricing on borrows, the availability, the, all those types of things. But what I've explained to people is when you take a low float name, right? I was talking to my friend about this, and if it had 1 million or 2 million shares on the tape, you're probably going to trade, at least for me, I never want to be a large portion of the volume because the larger portion of the volume that you are, the more risk you have these days. So what happens is people start to get a feel for this volume. It's 2 million, 5 million, 10 million. They start to make decisions based on the volume, but they forget where the float is, whether it was 2 million, 5 million, I don't even know on top. I know they did a raise for 5 million shares, but I don't know how much is free trading and restricted and all that good stuff. But and who knows who owns what and what percentage. I guess you could reverse engineer it and kind of try to figure it out. But point is that there's a thin float here. And when there's that much volume, people start to forget just how thin things can get. And so you start to get this false sense of confidence that it's extremely liquid. And they let you out, comes back down. They let you out, comes back down. And you keep on reshorting and covering. And it's just like a great liquid, trading vehicle. And then all of a sudden, once they let it kind of paint the picture that, you're right, it's fading, it's starting to get heavy. Right back up, everybody's bent, and they start the trap from there. We've seen it so many times before. On ILAG, I posted the chart very early at $7 or maybe even like 680, 690s. And as soon as that happened, because we know top was washing that volume back and forth, and we know that it was a WhatsApp pump, right? We know that it is no different than all the other ones that have been the liquidation plays. However, as we've discussed and as I've talked about in the past, some of that size that, I might have taken on the liquidation plays, back then it was fine. And like this whole circuit to circuit to circuit thing was not really something that you had to necessarily worry about. It definitely happened, but it was not this PTSD style, like, oh my God, it's going to 900. And what happens now is when things circuit halt, people start to panic. And it's just this auction price just keeps on going higher and higher and higher because people are like, I need to get out because if it goes to the next one and the next one, like that's it. I'm going to end up owing money. So that starts to bring the auction price higher and higher, and obviously scares people out of these trades. So back in the day when these liquidation plays would happen, a lot of times they do that, go up into one circuit halt, and then just come right back down. A little bit different now. More people are doing the same thing. They're crowded. If everybody's looking to do the same thing and it's not going down, you have to take that warning. So when top came down and it flushed, it did not have SSR on, right? And if you looked at it, there was a 100K bid, 50K bid, 100K bid on the left side, right? And we usually see that because what happens with these WhatsApp pumps is they tell you to put a limit order at a certain price to buy. So sometimes you start to see that limit area start to build up. On this particular one on top, all the offers come down and they're literally hugging a penny above, right? So typically what you would see on an SSR name is all this offers, all these offers pressuring because they can't hit the bid because the SSR is on, right? So if you put a limit lower to fill on a short, you're just going to go on the best offer. So the lower it goes, it literally just keeps on hugging the offer down. And that's exactly what they did with this. They painted the picture that SSR was on, and basically it entices everybody to say, holy crap, there's 50, 70, 100K shares on the offer, and there's a 50K bid. Like, that's kind of no-brainer. Like, I'll just slam the bid. Or people go in thinking, I'm just going to take a small part because SSR is on, it's hugging the offers. SSR wasn't on. So they fill all the bids, and guess what? You know that those are probably all shorts because for the past month, they've been wash trading it back and forth, back and forth, back and forth, right? So if you were going to sell, you would have sold. If you were going to short, you're going to short. And it had a good pop up, came down, flushed, enticed everybody into the bids, and then right back up. So that's okay. Ramps up. And I think it went into one circuit halt, just like ILAG. And then it almost went down to a downside circuit halt, right? It went into a circuit down formation. And once again, just like SSR, all those offers come out because everybody thinks like, oh, I got to get out before it circuits down, right? And then they swiped it up. And so at that point, it was like, hey, this is different. A liquidation trade, a liquidation play stays heavy. It's not trappy. And so that's where that warning came out. Did I think it was going to go to 200? No, no. And so if you take that as a takeaway, like, hey, he's saying I told you so, and he called it. I'm not saying that at all. What I am saying is that the stars were aligning. The warning signs were there. And to me, hands off, because that no longer fits with my personality. I care about my accounts. I care about my money, and I don't want to end my career. Something like Kodak, when I lost huge, if that was in today's day and age, and when it went to 60 and that was like a really big thing, and then it came right back down to 30 and 20, and obviously I made half of it back right away. That I was thankful for that. But in this day and age, that could have gone 60 to 80 to 120, and maybe I would have completely ruined my entire career. That's the difference between the circuit halts these days and back then. And that was only, a couple years ago. But it's getting progressively and progressively worse and scarier and more lethal every single time. So when those signs show up, no, it's not always going to happen. It's not always going to be like, I told you so. I knew, not to touch it. It was going to do this. No, sometimes it's just not going to do anything, but it's going to look like it, right? Just like Huddy, HUDI into the close. All the signs are there and it looks same, but instead they use that as the exit. So same deal, same sort of warning. Could Huddy have done it? HUDI? Yeah, sure, maybe. But same deal. I waited until about 335, 340 or so, and I think I shorted around 1170s, and then it ramped up to 1250s. It came back and they were supporting at 12. And so my entire thesis was that after top, no one in their right mind is going to take a short on Huddy into after hours on a Friday. Brokers are going to force everybody to go 100% cash because they're not going to go night number 2 with something crazy. And I felt like they were going to exhaust everyone out, sell the farm, and walk by close and or after hours. 100% right thesis. Did I make money on the trade? No. I actually lost on it. I traded 1170s to like 1250s or so. And I said, you know what? I've got an event tonight. I am not sticking around after hours. I am not holding this in the event that it goes to a circuit halt. I did not think it would. I thought it was going to do exactly what it did. And I said that. But the risk, the reward, the stars were aligned. It's not worth the risk to me at this stage in my career. And that's why hands off. I tried when I saw, what I saw, and I thought that all the covers had come in 9 to basically 12, 1250. And like I said, I started in small. If 12 started to firm up, I was going to move on. If it stayed heavy and started to exhaust out, I was going to trade it into the close. And so 12 firmed up, soaked everything, and I said, hands off. Because you know what? We wouldn't be having this conversation if it did go to 20 or 25. So again, as you can see, did I make money on top long? Did I make money on Huddy long? No. Did I see these trades setting up? Absolutely. Did I have confidence to get long on Huddy? Yeah, I did. But what if? What if? So again, it's a hands-off kind of situation. Same thing with top. I had confidence to get long. I did. I put in the stop. But what if? I'm not okay really with the risk of it potentially going down into a circuit halt. So sometimes it's better just to move on and miss the trades. And it's frustrating and yeah, I could have, would have, should have. But you know what? You're going to say that a lot in your career. And it's better to have a career than not have one at all because of that one ticker. Um, Other than that, okay, oh, max stops. Now everybody starts to talk about max stops again, right? That's literally every single Sunday we talk about max stops. And it's situations like these where it's finally like, okay, I'm going to do it. I'm going to do it finally. And it sucks that it has to come to these types of events to make you realize that you need to do it. But if you're listening today and you don't have one, you need, in my opinion, to put one on. First thing Monday. It will save your trading career. And again, you're going to be upset when you stop out. For me, what I like to do is, you find out what you're rarely down compared to what you make on your winners, right? And for me, it's a number where, it's a day or two, maybe up to 3 of, just a really it's 3 typical trades. Or maybe 3 days of good trades that you give back. Something that it's like, whatever. Something that you're not going to be emotional about. If it's too big, and you let it, blow you out at a wild number, it's still going to have the same implications as, a huge runner that, blows you out anyway. Sure, you'll have money left, but you're still going to be not confident, scared, emotional coming back to that market. So whatever that number is that keeps you without emotion, that keeps you on your A game, that's where your number should be. And that number for me has come down from 300 to 100 to 50 to 35 to at sometimes leading into summer even lower, right? Depending on the market. I do adjust based on the style of market that we're in. When we need a little bit more room, I'll go back up to 35 range. When things are just kind of consistent, I'm rarely down a lot because I start in small and I scale into the winners. If I start in and I'm wrong, I'm not scaling into that trade. So it's rare that I have some major drawdown before I make a lot of money. It's just not my style of trading. So I keep that stop in and it saves careers. So don't be too proud not to have a max stop. We talk about it all the time. We talked about it after ILAG. It prevents stuff like top. Again, I went over a little bit about, the warning at 7, the discussion about the fake SSR, the picture that they created. I spent a lot of time in the room on Thursday trying to shift the focus. Everybody gets so zoned in and looks at this portion of the move instead of this, right? And everybody's like, they'll follow through, getting heavy, breaking down. And every single time I see those comments, it's the same price. It's in the same dollar range, but yet you see what you want to see. You're rationalizing, or you're basically taking this picture and molding it to your viewpoint to prove yourself internally that you're right, that you should be short. And so as you guys saw it, I posted that, I don't get like emotional, or I don't get mad, but you know, it does anger me when people don't take trading seriously and they'd rather gamble away at maybe their one shot at taking, this trading career to the next level. So as you saw, I posted this whole thing around $15 because there was this Chinese article that came out that had like they were going to be raising, and they got an F1 approved for a raise at $3.50 per share. It got circulated on Twitter. People were saying they were max size short and all this stuff. Well, guess what? It wasn't going down. So if everybody just hammered in because that article and it doesn't go down, what do you think is going to happen? Right? Use the information at your fingertips. Don't ignore it. And what happens is when you're in that trade, you try to like prove yourself right. You have to take more of a macro look. And at that same time, after those filings, we saw the 50K, the 80K offers, and they were soaking on the bid side. So that to me was a sign, hands off again. And that is when I went into the warning mode at 12:20 or so. And I said, there's two scenarios here. And they involve 3:30 p.m. And it's either going to have some huge exit and then it slams down, or it's going to circuit up and it's not going to open until 4. And there's going to be zero liquidity and accounts are going to be broken after hours. And that's exactly what happened. So, yes, top was predictable. Yes, the signs were there, but it's the desire and the need and the whatever it is, the addictive personality of traders that they have to nail this trade that sent it into the atmosphere. So be cautious. And remember that this current market environment is far more lethal than anything in years past. And when that liquidity drives up and the offers are gone, it's not just about losing your money. Sometimes you're going to end up owing money. Yes. So that's it. We will get right into Sunday Scan. T-shirt winners, Michael Berkeley and P. Meddy. You've got the shirts for this week. But again, most won't read the text that I put in Scan, so hopefully you guys go check out the blog post. But most will say and take their takeaway. When I warn and when I say this stuff, it aggravates me because people just say it, think it's me saying I told you so. I'm putting the information out there for you to be able to reverse engineer it. I'm putting the information in your lap so that you can see it next time. It's not about me calling it, going to the moon. It's not about me getting long and saying I told you so. It's about how can you identify it next time so you don't lose all your money. That's all it's about. So I do hope that, genuinely, I hope that you do take away a lot from this video. I do hope that you take away a lot from these tweets that I put out there. I put them all out in real time. You saw them. So the warning signs were there. The writing was on the wall. Prevent it next time because you might not be able to get out next time. All right, guys. So for the second part of Scan, as always, I am not a financial advisor. These are not buy or sell recommendations, and this is for educational and informational purposes only. My goal here is to show you, what makes sense, what doesn't make sense, what's highly risky, what's higher edge, and sort of my thoughts for the week ahead. Just like last week, we went over the dip and the rip, and if you apply that this week, you saved so much trouble, so much emotional back and forth. And the thing is, I might have dedicated this video towards top, and maybe 80%, 90% of you don't even look at it or trade it. But it is the noise. It is the noisiest one, and it is the one that fueled the rest. And my goal really is, how can you get prepared for the next time? And, the warning signs were there, as you saw, and all I want to do is show you how to find them. It's not about necessarily making money off it. It's just about saving your career, quite simply. All right, so first and foremost, Huddy, unfortunately, it's down to like 680 after hours. And it is frustrating because that is the trade that I wanted. But like I said, if it went 17 or 20 after hours, we wouldn't be having this conversation. So yeah, it's down, but hopefully it pops up. Maybe we get a circuit halt back up, and maybe it goes 7, 8, almost 9, and then fades back off. But there's a good chance that it will just unwind back up. And there's going to be probably a couple that have a secondary move. It's all about which ones attract the shorts and which ones don't. And so what happened, and I'll get into this on the video that I plan to make as well, but if you look at Huddy and MEGL and some of these other ones, some are going to have this outlier kind of, not necessarily outlier. Some are going to attract more shorts than others, right? And when top flush down, you see MEGL getting, pushed down, or at least all the offers, because it had SSR on. So then you see him swipe it. And if top comes back, guess what? All those shorts are underwater. So understanding which ones have these shorts pressuring in certain situations, but then they oddly hold on, is going to help you from getting chopped up. MEGL was a very hard trade. If you covered 100% of it every time, it was good. But if you were trading around a core, you did a lot of work for nothing, or probably a small loss, maybe a small win. So ideally, again, Huddy, 8, 9, blow off, failed follow through potential, watch your sizes. I would probably, utilize that same scenario for, the rest that I have, MEGL and some of the other ones. TGGX, that's up after hours. It'd be nice to have a nice blowout move, 27, 28, 30, and then look for failed follow through. It's been on a nice run. On the failed follow through side of things, I have TCJH, MEGL, and UCAR. UCAR was very nice on Friday, a nice little push up, and then unwound really nice. Those types are great because you can make a buck a share multiple times, and it doesn't take a ton of risk. And for me, it's about letting the move kind of exhaust out. That's one of the biggest things that you'll notice a lot of times. In one of the maybe two videos ago, I said, when you want a short, wait 10 minutes, right? Wait 5 or 10 minutes and just see if you still agree, right? If you use that on top, you would see that it didn't agree, or MEGL and lots of the other ones. And that was sort of what I used on UCAR. UCAR, when I think it's a short, I might put on a little bit, but wait for it. Wait for it to kind of spill out. And a lot of times you'll see it kind of traps, ramps up, and then it comes right back to that level. Basically a mean reversion type trade. You saw that on top. You saw that on MEGL. You saw that on all these different names. And, that's something that, you can do by just 5, 10 minutes. Wait, do you still agree? And then go for it. So again, on TCJH and MEGL, we're going to have some back and forth. It's going to depend on top and HEDI and MEGL and all these names. So they're all going to trade in tandem. If top were to halt for some reason, obviously the other ones are probably going to unwind hard, right? Now, I'm not saying that it will halt or should halt. In my opinion, I don't necessarily, yes, there's manipulation for sure. But The reality is it was a short squeeze. Short squeezes are not illegal. The means in which they create it and the wash trades and all that kind of stuff, sure, that's illegal, but that's a lot to prove, right? So they can't just necessarily halt a stock because there's a bunch of wash volume. It takes a while for the government to kind of figure things out. So I would not, just like I said on Friday, I would not play for a halt, but obviously you saw it unwind. So it's all just one big short squeeze. So under the continuation side, I've got Wolf, nice breakout so far. I'd be watching dips versus those 150 levels. TIO, you guys should be familiar with. TIO has been a nice one. I talked about the dip and rip candles. I talked about the wicks. And I talked about the fact that when it flushes out and comes back, that creates longevity on a move. So the goal on TIO was ideally a 250 253 kind of breakout. That's been the idea for the last couple weeks on scan. So far, it's been continuing to go. Obviously, the higher it goes without a correction, the bigger candle is going to be when it comes in. So be aware of that this is not just some easy, long type trade. I'm not long. I'm monitoring it. It was a nice long opportunity off the flushes, but the higher it goes in a steady mode, it's just a slow squeeze. And typically the slow squeeze either ends in a stuff move or a parabolic move, and then it comes in hard. So be aware of that. The last two or three, OSCR, nice breakout formation there. I'd be watching dips versus maybe that 650 level. 7's been the top. So if 7 starts to break out, there's two scenarios there. Sometimes it runs through 7s and then, slams back and unwinds. And then other times it starts to base at 7s and continues on. So be cautious getting all bulled up if it just ramps up through 7 and comes right back. You want to see it consolidate. MF, I took long. I don't know if I like it. But, I was thinking volume and the China, moves and things like that. I brought some into the dip. It wasn't much of a dip, but I bought some into the close. And, I was looking for a follow through. But if none of the other ones are gapping up, then, there's a small, slim chance that it would be. And last but not least was IMMX, which you guys know if you guys were in IU. That was a dip idea on Thursday for continuation, and so far so good. So that's really it. I mean, I think in this market, it's not really about scans. That's why I spent 8 minutes on this part. Not a long time, not, super focused on key lines and things like that, because we're going to wake up Monday and we're going to either have 20 stocks that are down 50% in China, small caps, or we're going to have, other names that are up 120, 50, 200%, and those are going to be the focus names for the day. So that's it. But again, if you lost, if you got smacked, just like when I went over with, all my losses in the past and when we talk about them, if you're going to come back Monday and try to fix it, you're going to go backwards. If you're going to try to fix it in the next week, you're going to go backwards. There's nothing that you can do about what happened except in the future and recognize it. There's nothing you can do. The only thing you can do is have more of a macro, big picture look on where things are going to go from here. So if you have a big hole in your account from stepping in front of stuff, oversizing and fighting a name, whatever, you got to look, whether it's 3 months, 6 months, the end of the year, make a goal for yourself and start checking those boxes. If you try to do it in too small of a time frame, it won't work. It really won't. So make sure that you check off the boxes slow and steady, and before you know it, that rebuilds your confidence. And that's really what this is all about. Right now it stings. It's a big loss. But as you start to check those boxes and reprove to yourself that yes, your system does work, that confidence comes back, and it's not so much about the loss anymore. It's you're back in the rhythm, right? And right now you're out of sync. Right now you might be, feeling like you have zero confidence, questioning whether or not you can even do this full time, questioning whether or not, that you even have a career here. And it's true, you might not if you can't combat that the next time. However, it's all hitting hard right now because it's fresh, it's new. And again, you're going to question and everything and have low confidence. So by looking at 3 months ahead or 6 months ahead and making a realistic expectation of what's possible, that's going to allow you to be happy with those small steps that rebuild your confidence. And over time, you're going to look back and chuckle and know that this was a defining moment in your trading career. So, as much as I know how it feels, I've been there more times than I like. But the one thing that can help prevent is that max stop. So keep that in mind. And I wrote in Scan, and I know people will combat and say, well, max stops don't trigger after hours. Okay. But you know that CXAI just a week ago, similar situation, didn't die off, had outlier volume, outlier move, went from $8-9 to 69 the next morning in pre-market trading, not necessarily after hours, but pre-market. So if you took top overnight into after hours, unless you forgot from a week ago, that was possible. And that's not to rub sand or, rub it in. It's you have to accept that. And you have to know that you knew. And we can always blame other reasons and other things and this and that, but you knew, I knew. It's just whether or not we can control, whatever you want to call it. People call them demons, inside that force you to need to have that desire to nail that trade. And really, trading is about avoiding that desire. And whenever everybody's doing the same thing, it's going the opposite way. That should alarm you. There's so many warning signs. So, anyway, I hope that was helpful. And again, all this video is not about I told you so. It's not about I called it. I didn't make money on them. But what I didn't do is I didn't get blown up on them. And, that's preventable. And it was preventable. And the signs were there. And that's where the real focus is. And that's what I want you guys to take away, especially if you had a hard week. If you had a max stop, if you avoided it, awesome. Good job. And then the only other piece is just something that I'm personally working on. I know not to short them. I know to warn about them. I know that there's potential, but I just can't trust it getting long. But you don't even need that much long. So my goal in the future is, as I continually try to get better, is, the mindset of thinking like an option. I can take a SPY option and be perfectly fine with losing 50% to 100%. But, on these particular names, I can't quite get the same mindset. And I think that if I did take that mindset, knowing, hey, I'm going to take this with this much and I'm good with losing 50%, forget the stop, forget all that, like just 50%, let it roll. I think I could do a lot better. So anyway, that's it. And again, remember that all of these happen randomly. Nobody called them ahead. Nobody's expecting, things to go to 200. So be careful going for the next one thinking the same thing's going to happen. No one in the next couple weeks is going to take as much size short on such a low float. This cycle is over, in my opinion. And you have to kind of go through the cycle and the close calls. CXAI going to 69, letting everybody out is part of the problem. Top goes to 69. Everybody thinks it's going to come right back down. They short 60 to 40, and then bam, it's over 100, right? So this cycle needs to be forgotten. There needs to be new players coming in. There needs to be huge shorts making lots of money, getting confident, overconfident, oversizing, and then the cycle will be reborn. But be cautious looking for the next 1,000, 2,000% type mover and thinking that you've got it. There's going to be a lot of failure over the next couple weeks, but the markets that take also give. So remember that. And if you had this one outlier loss, that doesn't define you as, a terrible trader. You have to look at what you've done over the long term and have confidence with that and get back to business. So that's it. See you guys in the room. And there is a link for the sale. I think today is the last day for that as well. The tax back sale that we do every single year. And then I don't think we have another sale until November, Black Friday and Cyber Monday. So that's it. Have a good rest of your weekend, and we'll see you on Monday.